This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Michael Arrington, who's an entrepreneur and investor, also the founder of TechCrunch and Arrington Capital. Michael, great to have you back on the show.
Hey, Tony.
Well, Michael, it's brutal out there. You have a plethora of investment experience. You've been through many market cycles. And people want to hear from you. What is your take on what's happening and how are you navigating these waters?
Well, it's funny. So you're not going to actually publish this till like next week, probably, right?
I was thinking possibly tomorrow.
Okay. I mean, the sooner the better, because God knows what could happen. And whatever I say could appear to be extremely stupid, right? Depending on what happens in the market.
Sure.
I mean, look, we're going through something right now we've all, at least I've been through before, and anybody who's been in crypto for a few years has been through. The writing, though, was on the wall on this one. In 18, when the market topped out in the first week of the year, there were a lot of signals, and our models at this point would have easily picked up those signals, and we would have known, the market was overheated. A lot of people did know the market was overheated, and for some very smart investors, fear overtook greed, and they got out at the right time. This time, though, it's different, and it's always different, but this time it doesn't feel like a crypto winter. It feels like an everything winter, and also that might mean it changes and the outcome might be different. So I was reading the news about Coinbase doing 18% layoffs this morning.
Yep.
And the message that Brian Armstrong sent to his team, said it looks like a crypto winter might be coming. We need to cut costs. And that's fair. But this time it's not just crypto falling when everything else is steady. This is all Fed driven. I mean, it's clearly all Fed driven, and we've known it's all Fed driven because the Fed told us in the beginning of the year they need to fight inflation. It isn't transitory, and so they're going to start tightening. And they did exactly what they said they're going to do, and they continue to do it. And we're seeing asset prices fall across the board. And we're seeing all kinds of anomalies now, like the Japanese treasury market yesterday showed signs of distress. Even though they're doing yield curve control, rates were up. I mean, this stuff is alarming. And so what's happening in crypto is totally predictable. We did predict it, and we got out of all of our leverage and went largely to cash months ago at this point. And I think a lot of smart investors did. So what also, though, I mean, that doesn't help anybody, but what also might be different this time is the Fed will have to loosen, stop tightening and probably loosen at some point soon meaning this year, because they're not going to be able to tame inflation with rate hikes like Volcker did. And the reason is debt's too high. I think people are finally understanding this point, even though a lot of the big banks' research don't take debt into account, government debt, in determining hey, the Fed's going to fight inflation, they'll win just like they used to. They can't. They cannot raise rates that much because we're already paying like $300 billion a year in interest. And entitlements, interest, and defense are well over 100% of tax receipts. We can't. And the more debt we pile on, the harder it's going to be to pay that off. Tax receipts are going to go down because nobody's making capital gains. That'll add to the deficit. So at some point, the Fed has to give up. They have to. Mathematically, they have to. And when they do, this winter may disappear as quickly as it came. Now, what comes next won't be healthy, but certainly we should see inflation driving asset prices up at that point. So this could be over by the end of the year, and we could be in a whole other paradigm.
So certainly some pain ahead. And like you said, it's kind of macroeconomic factors, not to mention geopolitical, Russia, Ukraine, obviously COVID situations and so forth.
Yeah.
Just seems like
we didn't have a blow off top in crypto that we had in late 2017. We had a blow off top and then it did what it does. We didn't actually have that. We got nowhere near blow off top territory. Blow off top territory was Bitcoin at 150,000 by the end of the year, last year. That was like, okay, now it's time to get out. We didn't come anywhere near that. So, yeah.
So do you liken this to a pseudo 2008 type crash where there's just the whole system is having an issue right now? It needs to be flushed out, and then we have to reset to a certain degree.
Well, in 2008, we didn't have an inflation issue, and we didn't have quite the debt levels that we have. So this is new and something different. And I don't think anybody knows what happens here. We just don't.
Now, from a crypto perspective,
but just to dig into that a little more, in 2008, the Fed flooded the system with liquidity, right?
Right.
They're doing the opposite right now. They're tightening right now because they're more worried about inflation than anything else. And the economic indicators of employment and other things are giving them the signs they need to defend tightening. That's new. It's nothing like 2008. So we're in an inflationary environment. The Fed is purposely driving down asset prices. Everything that's happening in the stock market and in crypto is purposeful. And they have to decide what they're going to do next. The weird thing is, it's just the Fed. Like that, they're the only variable that matters at this point is what they do. So
on that note, Michael, and I don't know how much you can talk about this, but how much pain can they put on the economy and the people and wealthy individuals who are seeing their net worths go down, right? Who are still holding positions in crypto or stocks, whatever it may be, before there's some sort of revolt. I don't know if you want to call it that, but how long do you think this pain continues?
So tightening is a blunt-edged weapon, and it is definitely driving down asset prices, and the rich are disproportionately affected, whereas inflation disproportionately affects the poor.
Right.
But the big indicators of inflation that this is not going to have any real effect on are energy and housing. So people still need somewhere to live, and most people need to drive to work. And so that has nothing to do with rich people buying fewer yachts, right? Mm-hmm. So how are they going to drive that down? They're probably not going to be able to. I mean, I guess there could be people who choose to become homeless or choose to stop driving, but that doesn't really work. So I don't know how the Fed is going to decrease demand and the two drivers of inflation that really have nothing to do with asset prices. And so I'm not sure they can tame inflation, which is why some people are talking about stagflation now, where they drive us into a recession, but they don't solve inflation. What does that look like? Well, that could look like a decade of nothing happening, which would be really bad. I'd prefer volatility to nothing. So. Yeah,
absolutely. Let's hope that's not the case. So, when it comes to crypto, how are you and your fund navigating? Are you buying the dips? Are you waiting to see how things pan out first? So what's your strategy there?
Well, what we did 4 months ago was our strategy, where we got rid of all leverage. And we had leverage last year. And that means all of our debt's been retired, like all of it. And then some. We moved to a fairly large fiat cash position. And we're just sort of waiting it out. So are we buying the dips? Not yet. Right now we're in a hold position. Our models do indicate that we would buy at certain levels. Theoretically, we'd even take on leverage and buy even more. But at this point, we're not. Like a lot of people, we're kind of sitting and watching.
Sure.
Where we are active is on the investment side. So our venture side of our business, this is a perfect time to invest. Valuations have come down. They will come down further. The best companies are usually launched in these types of periods. So we're super active there still. Yeah.
So speaking of that, you launched a $100 million Moonbeam fund.
Yeah.
Can you tell us about that? Why Moonbeam and your plans there?
Yeah. Well, it's not $100 million anymore. It's slightly down. Last year we launched an Algorand fund, and specifically designed to invest in the Algorand ecosystem. That fund made some great investments last year, made a lot of money. We want to do the same thing with Moonbeam, and Moonbeam is much earlier than even Algorand is. We find it entrancing. It's an EVM platform built on Polkadot. It marries EVM to the Polkadot ecosystem with shared security, shared communications. We think there's going to be incredible new types, like new apps built on this that could not have been built before. And we're already seeing that. So we've already made one investment that was announced in Moonwell. And I think we've made 2 or 3 others that haven't been announced. In fact, I know we have. So we just think there's going to be just an incredible, first of all, DeFi is brilliant on Moonbeam, but there's going to be stuff we can't even imagine yet that's going to be built. And so we approached Moonbeam about launching this fund with them. They were all for it, and we put it together. The fund is funded by us because we made an early investment in Moonbeam. So we put most of our Moonbeam into the fund, and then Moonbeam is an investor, or their foundation is.
And I wonder if you could take us behind the curtain a bit with, as a fund and making these investments, what is your timeline for a return on investment? I don't know if you can share anything like that, but maybe ballpark.
I'm looking at the display behind your, unless you're mirrored, your left shoulder. I want one of those. What are those? I
got it on Etsy. It's a ticker, and you can put stocks or crypto on there. And it's probably not fun to watch that.
No, it's not. I was like, is ETH really that low? But is ETH really 1229?
Yeah, I think it bounced a little bit this morning.
What's it priced in Bitcoin? Is it 0.0? What is it? 76? Anyway, it doesn't matter. I'll look later. Because it'll be different tomorrow. Please send me a link to that if they're still selling them.
Will do.
Sorry, what was the question? Timeline?
Oh, yeah, your timeline for like a return on investments with these placements of capital.
On the venture side, it's much faster than regular venture. I mean, regular venture, my first venture fund from 11 is still paying out. So we see an investment horizon of between a few months, and there's some investments we made in 2018 that are still haven't matured yet, but are doing fine. So sometimes they pay out quite quickly. I think Moonbeam, we did invest the first time in 2020. We made another investment in 2021, and it became liquid in January of this year. So that was pretty fast, like 18 months, I think, to liquidity. So, a year, 2 years, we start seeing real results.
Oh, very cool. I wanted to ask that because I know a lot of folks who are on the retail side who invest, sometimes patience is a hard thing for them. And yeah. And I know,
well, it's trading versus investing. I mean, investing is you have a thesis, you make the investment and you let it play out. Trading is about cutting your losses when you made a bet that isn't going the direction you want. And there's friction and stress between those two ways of doing business. So
that's great perspective. I want to talk about Luna, and I know you guys had invested in Luna. I know it did really well last year, but then it had to collapse. Would love to get your thoughts on the situation and what took place.
You mean the crash?
Well, maybe the collapse with the stable coin and that kind of putting Luna all the way down, of course.
Yeah. Well, I sent a note to our investors the week after it happened, and I told them what we knew at that point, which wasn't a lot. Like, there were a lot of rumors. There still are a lot of rumors. It's still not totally clear to me exactly what happened, whether it was an orchestrated attack, whether it was just a fundamental flaw that was, stressed in the market environment. So I don't know. I think we will know someday, maybe, but I certainly don't know right now. Luna 2 has launched, and I think, I'm guessing, but I think the focus now is not to have a stable coin, of course, but to really focus on launching apps on Luna 2. And I think we'll see a slew of new apps with their own coins launching, and it will either succeed or fail on the merits, I think. So,
Sure. Yeah. And I guess I was thinking about it, and I lived through Web.1 as a teenager, and I remember doing some things which I can't give details, but there were flaws in Web 1.0, and there's flaws now in some of these crypto technologies, and it has to be perfected and worked out. And I think that's kind of what happened with the algorithmic stablecoin and that was put together there.
Yeah, I mean, look, UST survived. I think it was May of last year. Survived a stress test, and that was great, because when you survive stress tests, it means you come out stronger. It did not survive this one, and it did what it had to do: fall to zero. We did not sell anything as one of the investors in it. And the fact that we ran a node, we were actually trying to save it up until the last minute. So we held through it. We didn't liquidate any UST. We didn't liquidate any Luna at all during that period. So yeah, we took losses, and that's part of investing. So,
for sure. Yeah. Well, the XRP army wants me to ask you, are you still holding XRP, and how's Arrington XRP Capital going? That aspect of it, and any thoughts on the SEC Ripple lawsuit?
So our what we refer to as our flagship fund, our largest fund, is Arrington XRP Capital, and that was a fund that we launched in 2018 with the original investors. It has taken on new investors regularly. It ballooned up in size to, I think it was close to $2 billion last year. Wow. It's doing great. It's not doing great right now, but it's doing great big picture. And yeah, we hold XRP, and we talk to Ripple daily, if not weekly. I believe in XRP. I believe it will recover. It needs to. And with regard to the lawsuit, I don't know. I know the same thing I read in the news. It looks like it's going pretty well. It looks like the SEC is way over its skis, but we'll see what happens.
Do you guys own any equity in Ripple as a company?
We don't. No.
Okay.
Yeah.
So let's talk about the SEC and kind of crypto regulations. Gensler is getting a lot of pressure now from members of Congress. There's Tom Emmer and his group, and then you had the crypto executive order from President Biden in March, and then the Lummis-Gillibrand bill just last week, which seems to balance out maybe the power between the SEC and the CFTC. What are your thoughts on the entire crypto regulation drama, so to speak?
I'm a libertarian, and I'm generally just annoyed by government. So people on our team are responsible for following all the regulations, but I don't know anything that hasn't really been in the news. My plan there, we support a couple of lobbying organizations, and then my plan is personally to donate to every pro Bitcoin and pro crypto politician that's running for office, and I've done a couple of those, and that's it. Sadly, in the US, the way things get done are you pay off politicians by donating to them, and then they have a soft commit to sort of help you with the cause that you care about. I'm turning into a single issue voter, and that's where I'm choosing to apply pressure.
I know last time we spoke, you mentioned you're libertarian. This is kind of off topic a bit. How do we get that third party to rise up and maybe bring more balance? And not that we want bigger government, but to have an alternative and another option?
I don't know. Where the rubber hits the road, it just seems impossible to break the duopoly or whatever it's called of the two parties. I don't understand how the cognitive dissonance to hold these views as a Republican or a Democrat it's difficult for me. Democrats are becoming an authoritarian party based on the argument of extreme liberalism, but the liberalism, it's sort of like or else, and at the point of a gun is not liberalism, right? And so I don't get the Democratic Party at all. I think some Democrats are fairly reasonable. The Republicans, theoretically love the Constitution and love liberty, but they also sort of love the authoritarian sort of well-armed police force. And so I don't really get that either. Neither party is for fiscal discipline anymore at all. They both like spend as much as they can. That is, I talked about the Fed problem, but the Fed is the problem because they're trying to juggle what Congress is doing with spending. If Congress could just run some surpluses, which is structurally impossible at this point, unless they cut defense and entitlements. But if they could run some surpluses for a decade or two, we could get out of this hole. But they're not. The deficits are increasing. They're getting up to 10% of GDP, and it makes an impossible situation for the Fed. Anyway, I'm going off topic. Both parties just seem like insane to me. They both love war. We are in forever wars. We sort of got out of Afghanistan in a bad way. Now we're in Ukraine. I don't know. I don't know if in my lifetime we're going to see anything happen though.
And is that kind of a symptom of the debt-based system that we're in? We went off the gold standard, and now, look, they have talking points on both sides, right? Well, this one's for raising this debt ceiling and that and whatever, right? But it's like you said, the Fed, they have to keep the machine going, and the only way is to keep printing. And how do
well, the way is to get to yield curve control, where the Fed agrees to buy as many bonds as they have to keep yields low enough that we can make the interest payments. But that's what Japan is doing, and that's what broke yesterday. And so, like, rates went up, even though it shouldn't be possible for them to go up in Japan. So things are breaking. So yeah, we're fucked. I mean, seriously, like it's really bad. And it's, people with money can usually find ways to save enough of that money that they'll do okay. But the generation coming online now is like, who are 20, 21 years old, they're going to have a decade or two of nonsense to deal with.
So on that note, where obviously the same economy is not going to exist, and bigger problems, right? Bigger debt and so forth. I've seen guys like Andrew Yang, talk about universal basic income. And then I hear that the digital dollar is coming, and they'll be able to send money to people directly through whatever wallet. Is that the future we're headed to, where it's just because there's not going to be enough jobs with technology and all these situations, that they're going to have to do UBI?
UBI, libertarians have mixed feelings on UBI. Sure. It's interesting. I mean, we had versions of this during COVID where a lot of money was flowing to people because, a lot of people couldn't work. And we saw what happened is a lot of people became sort of addicted to the ability to make basic ends meet, live in a shitty apartment, eat rice and beans, and watch Netflix. They're like, this is pretty good. It's, it's better than working. We also see a situation where a lot of immigrants immediately go on Medicaid. It's a huge cost. And that's sort of a form of UBI, and it's not sustainable. And so at some point, maybe decades after it happening, but at some point, the only way to make it all work is to limit the number of children you have. Like, if you're going to be on UBI, you can't have children, or you're allowed to have one child or something like that. And I guess if people want to make that trade, they can, but there is no other way to make UBI work in the long run if the people on it who are not paying into the system, which would be most people, that number keeps exploding, and fewer taxpayers to fund it all. The other thing about UBI, that when people were talking about it, was when MMT, modern monetary theory, was sort of the hot topic, but MMT clearly got us to where we are now, where spending doesn't matter. Yep. And I think people are realizing MMT is as much bullshit as most Keynesian sort of topics, and so that just doesn't work. So I'm not sure UBI is really going to work, and if it'll ever have the taxpayer base needed to fund it.
Do you feel that crypto and DeFi could potentially be a solution where once again, where there's not enough jobs and there's not, enough economic power to sustain everybody,
Yeah.
but through crypto and decentralized finance and a global market on the blockchain could help in solving some of these issues.
It's very fucking hand wavy.
Mm.
People want food, a roof over their head, and Netflix, right? Let's say that's like the bare minimum, and some healthcare or they die. How does DeFi provide all that stuff? I mean, you can make money out of nothing, but you can't make food and housing and Netflix specials out of nothing. Like that requires resources. So at some point, people have to make things. I mean, unless we're just going to plug into some kind of matrix-like machine and live in a virtual world and be fed through tubes, I don't see how that works. Yeah.
And I'm just spitballing because I'm also thinking about these things. I have a daughter, so I'm like, what is the future going to hold for her and opportunities?
Well, look, it's easy. All you have to do for your daughter is make sure you own 1 Bitcoin and put it on a cold wallet for her, and she will be in the world's financial elite.
Done.
That's it. 1 Bitcoin. And I mean, right now, that's only $20,000, right? Buy a fucking Bitcoin for her, save it for her, and like she's going to be taken care of. So, I mean, unless you don't believe in Bitcoin.
Oh, no, I do. And I actually did that already. My wife and I have it on a Ledger Nano S, and that is just hers. I'm not touching it.
Where do you keep the Ledger?
In a safe.
In your house?
In my house, yeah.
Where do you live?
I live in Alaska, on this mountain in Alaska.
Yeah, with guns and guard dogs. Yeah. Looks like Alaska. Don't you live in California?
No, I'm in New Jersey.
Okay.
Yeah.
Well, no, but I think that's smart. I mean, that's smart.
Yeah, and obviously the keyword phrases and stuff backed up in different places. I want to ask you, as an entrepreneur, and of course you're one of my heroes in starting a blog and did really well. Besides crypto, is anything else that's catching your attention that you're like, I want to go dabble in this?
Not even a little bit. I love crypto. I love the innovation we see. I love the energy and optimism. Regular venture stuff looks totally boring to me. There's areas I'm interested in, like biotech, but I have no experience there. I've made some investments in other people, but that's just black magic to me. I don't know how that stuff works.
Sure.
So. But regular venture stuff is terribly boring to me now. So.
Well, I should ask. Within crypto, aside from the fund, are you looking to do anything else, like any other startups or anything? And you may say, no, I'm not sharing my secrets with you or my plans.
Well, we have a couple plans that I'm absolutely not ready to share on incubated startups. I don't know if that's what you're asking, though. What are you asking?
Oh, if you're going to start like another crypto business.
Well, I mean, look, at this point, we help put teams together, figure out the right product, and then fund them to build stuff. And in a sense, that's helping to build companies. No, I think this is what I'm going to do the rest of my career is run this fund and try to help other companies succeed. Yeah.
That's awesome. Well, got a wrap-up question here for you. If you could create your own metaverse, what would the theme be?
Yeah, I don't know. Look, we were going to talk about NFTs too. I think NFTs are a lot more interesting than metaverse. The only question on metaverse, which I find really interesting, is land scarce or not? And so we're going to see both models. Nifty Island is one investment we made where land is not scarce. Everybody gets an island. And what you do with the island builds value. I like that model. I think there are lots of models where land is scarce, and that might work too. I'm just not sure that they're going to get the network effect up and running with all the competition out there. So I prefer the land is not scarce model like Nifty Island. Proppy, which my wife runs, has their own metaverse that I think they've announced now, and it's super interesting because it's marrying real world real estate with a metaverse. So I think that's super interesting.
Oh yeah.
Other stuff, we don't really have any bets placed there. And on NFTs, we have lots of bets placed on tools. We own a CryptoPunk, which we use for our Twitter profile image on Arrington Capital. We have a few other NFTs that we bought last year. I assume they're, not underwater, but not doing great. But we're not real good at picking art, right? For example. So yeah.
Sure. It's interesting you mentioned that you're not looking at the scarcity aspect, but rather what's being built on those islands. And I've been looking from a scarcity perspective because I'm so used to Bitcoin and capped supply, right? It's a dry value, but it's different. It's kind of like, building a great video game and people adopt it and start using it and playing it, right? I guess you could build. Yeah.
So Bitcoin is a perfect example of artificial scarcity working. Mm-hmm. Maybe it's going to work. I mean, I'm wrong all the time. Maybe it's going to work in the metaverse too. The product's going to be so stunning and so different than everything else. A lot of the metaverses we're seeing are kind of variations and flavors of the same thing. Cartoony, running around. Then you have some more photorealistic ones, but who's going to grab enough attention to get a network effect going where everybody goes there? I don't know, because that product's going to have to be really good, and it may need additional technology on the hardware side that we don't have yet. So we'll see.
Sure. Yeah, it's still very early. Michael, always a pleasure chatting with you. Thank you so much for joining me.
You're such a fucking pro. It's 29 minutes in, and you're just perfectly segued right into the end. So
a lot of practice.
Thanks for reaching out on this on Twitter. I love talking to you, and so I'm glad we were able to do it again. So
awesome. Appreciate you.
All right. See you, man. Bye.